China's economy grew 6.7% in the third quarter, so it's on pace to meet the official growth target for the year. But the increase is largely driven by government spending and a housing boom. Pamela Ambler takes a look.
Yes, of course, the focus is on China's key data. Third quarter GDP, 6.7% is what was expected, and 6.7 is what we got. That's in the target range for Beijing, largely helped by stimulus measures and a housing boom. Growth was on the same clip as first and second quarter, showing further signs of stability. But the picture we see here is largely one dependent on government spending and a red-hot property market that is about to overheat. 20 cities have imposed buying restrictions to curb real estate speculation. The property craze has the heightened concerns about China's growing debt problem. Just yesterday, Chinese banks reported a record amount of loans for the month of September, well above expectations, and that's mostly given in the form of mortgages. The boost in new lending is positive for growth, but there is a disconnect in what's actually happening in the credit market. Are the consumers becoming over-leveraged like the corporates are, and is that sustainable? The underlying story here is that the 6.7% GDP is good for the government in terms of reining in credit debt, which even the IMF has pointed out is an urgent issue. And will the stabilizing see the PBOC dial back from monetary stimulus and even switch over to a tightening phase by next year? And on the other hand, we have private investment data and exports remaining stubbornly weak. But one thing to point out is that consumer side retail sales did see a small pickup today. So we're seeing the economy moving in the right direction, fitting into that rebalancing story, becoming less dependent on trade.